Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, May 17th, 2018. So take a look at the S&P 500 here. This is the Spiders chart intraday, which again is the tracking ETF for the S&P 500. And you can see today we started out with an early surge to the upside before fading quite a bit here into the afternoon session. We've gotten a little bit of a bounce as oil bounced off of a rollover, and you can see the S&P bounced right along with it right there into the close on spot crude. However, a couple things I want to talk about. I want to talk to you about the importance of gap fills. So what you can see here very clearly, there was a major gap fill right here yesterday. If I put a line right there, notice that. So yesterday we came close, we didn't fill it. The market loves to fill gaps. Okay, so when you see a big gap created, always assume at some point in the future it will be filled. And sure enough, yesterday it got close, it couldn't do it, got it close over here, couldn't do it, fell back. Today it was like, all right, I got to get there. And it pushed up and it actually pierced it a little bit, touching this little pivot high area right here before fading. Once the gap is filled, the market feels like it's done its job and it can go the other way. And that's exactly what we saw here. And it all coincided with oil topping out as well and then having a little bit of a rollover. A nice little shooting star kind of doji pattern on the oil chart, by the way, on the USO chart, and very possible we could have a little bit of a top there. I continue to look for a top in crude oil. I am short crude oil, and I believe that we will head back down to about $67 to $68 a barrel within a week or two. I think we should hit that, maybe even sooner. We'll have to see. Just a couple little notes here. Notice how when we fell over, where did we go? Yesterday's low pivot and also these high pivots right here. Notice the support level there. That's what the market defended short term. But I will say this. I think the markets are going to go lower here because there's a gap to the downside that needs to be filled. If I zoom out on this chart, you can see right here. See this gap? Look at how the market early this week came close to it but didn't get there. The market is getting drawn to that. So it filled the gap to the upside. Now it needs to come down and fill the gap to the downside. My guess is that happens either Friday or next Monday. And it probably coincides with oil. Oil's really been one of the driving forces behind this recent 1 month plus rally in the markets, just shooting up, pushing through $70 a barrel. The reason why that's a positive for the stock market is because the S&P is made up of a large percentage of energy stocks. So you could look at Whiting, Petroleum. One of these that I'm just going to show you some that I'm looking at in terms of looking for shorting opportunities. If we go to WL, look at the run on this thing. This is insane, this run up. Basically a $20 stock now at $50, and this was a $20 in February. Think about that, $20 in February, and now it's trading above $50. I think it has upside right to here, so it has a little bit more to go, but then you'll see a very sharp pullback, a good retracement. I may buy some options, some puts on that if it does hit that. We'll, again, keep an eye on it and see how it trades out, but right now I'm definitely looking at a good short on Whiting Petroleum. If you look at Halliburton, all these stocks have had massive moves to the upside. You can see Halliburton's made a move. Chevron's even had a good run recently to the upside with oil, although it's getting into resistance up here as well. So just keep an eye on that. I think oil is the main driving force for this market short term. I also think interest rates and the dollar are very significant. If we look at the dollar chart here, the UUP continues to be strong, but it looks like it's starting to stall out here. I have a lot of resistance coming up, 2460 and above as resistance points on the UUP, so starting to look for a pullback in the dollar. And then obviously interest rates, folks. You can look at interest rates and how they're moving by looking at the TBT. And interest rates back above 3%. We touched over here. We're back up to that range right here. That's a concern for the market. If we push too much above 3%, I think right now we're around 3.09%, but if you start getting towards 3.25%, the market will have a panic attack. So that's another factor that you need to be watching on this market. In terms of trading opportunities, folks, look for that Whiting Petroleum, one of my favorite shorts, if it gets up to about $53 a share. I also like being short crude oil here. I like being long gold for a pullback in the dollar, a dollar trade that way, but to be long gold from down here as well. And there's a couple other opportunities out there that members are in with me as well as we continue to spit out record profits, basically all-time record profits, now north of, for comparing it to hedge funds, as I say before, hedge funds are probably up 3 to 5% for the year. We're up like 40%, and that's being conservative. Some people are up 100+%, those that utilize options and other methods to generate exponentially large gains on the trades that we're giving out. So really tremendous, folks. But bottom line is, we'll see how things go here. Take it one step at a time. I look forward to having you as members. Come take the 7-day free trial, and we'll see what happens to the S&P here. Take care.